This is Business Week Armenia, CivilNet's weekly economic digest. Here's what you need to know this week. The Armenian government plans to invest $37 million to set up a large industrial park and special economic zone in the country's second city, a project officials say could help unlock landlocked Armenia's trade potential. That's according to an official readout from Armenia's investment committee, which this week gave its formal approval to plans put forward by the country's economy ministry 3 years ago to build a so-called dry port in Gyumri. Economy Minister Vahan Karobyan told the committee, a government body responsible to the Prime Minister's office, that he expects private investment in the project to substantially exceed the $37 million the state is set to contribute. Karobyan met last year with senior officials from Saudi Arabia and the United Arab Emirates to review the dry port project, though as of now, no international investors have committed publicly to joining. An independent feasibility study last year found there is sufficient demand in the region to justify the project, according to the Armenian government. However, it remains unclear if the industrial park would be able to function at its maximum potential if Armenia's border with Turkey, located nearby, remains closed. The Armenian government has formally taken a minority stake in the company behind a long-stalled gold mining project embroiled in environmental controversy. In a statement this week, Prime Minister Nikol Pashinyan's cabinet said it had approved a measure allowing the government to take control of 12.5% of Lidi in Armenia, the company behind the Amulsar gold mine. The government signed a $250 million memorandum of understanding with Lydian and the Kazakhstan-based Eurasian Development Bank last February, greenlighting operations at the Amulsar site after years of delay, in return for a minority stake in the company. Lydian is ultimately owned by equity firms in the United States and Canada. Lydian broke ground at Amulsar in 2016, but development has been suspended since 2018, when residents of nearby communities began staging blockades of the mine entrance, citing environmental concerns. Even with the project now set to move forward, no date has been given publicly for the start of mining operations. Officials say the project would create hundreds of jobs and contribute tens of millions of dollars to Armenia's state coffers every year. The Armenian government has ended a program subsidizing the cost of transporting goods to Russia across the Black Sea following less than 6 months of operations and after spending more than $1 million. The ferry operated for several months but did not generate sufficient interest from exporters and importers, Karobyan told reporters last week. We did not see export and import companies use the ferry in a way that could convince us and our partners to continue the project, added Karobyan, whose ministry paid $1.2 million last year to launch the project to connect ports in Georgia and Russia. The government had presented the ferry as an alternative to Georgia's Upper Lars border crossing, Armenia's only overland route to Russia, which has been severely overloaded in recent years amid soaring trade. More than half of Armenia's multi-billion-dollar yearly trade with Russia transits through Lars, according to figures reviewed for CivilNet by the Armenian Center for Socioeconomic Studies. The Armenian government will loan more than $8.5 million to the company behind a planned scrap metal plant that moved construction last year away from an Armenian border village after repeated shelling from Azerbaijan. In a statement last week, Pashinyan's cabinet said the government will grant a concessional loan worth $8.7 million at an annual interest rate of 8% over 4 years to GTB Steel to build a smelter in the village of Ararat. The plant, a $70 million joint venture between Armenian and U.S. investors, was initially due to be built in the village of Yeraskh, just hundreds of meters from the border, but construction was halted last year after repeated shelling from Azerbaijan, including one incident in June that left 2 Indian nationals working there seriously injured. In October, Karobyan said investors had decided to relocate the smelter but dismissed a reporter who asked if the move meant Armenia had caved into pressure from Azerbaijan on the issue. In a statement last week, the government put GTB Steel's losses from moving construction at nearly $5 million. The company has so far not commented publicly on these latest developments. GTB Steel's Armenian co-owner, Grigor Teragazaryan, is a relative of former Prime Minister Aram Sargsyan, whose Republic Party proved instrumental in keeping Yerevan Mayor Tigran Avinyan, a close Pashinyan ally, in power after last September's city council elections. And as always, please follow CivilNet for the latest news and independent reporting from our contributors on the ground here in Armenia.